Hello, dear guests. It's a pleasure to present my vision about rent-to-own property solution here for today, like an alternative homeownership solution for the MENA region. So a couple of words about myself and my experience. I'm the originally entrepreneur from Russia, where I built from scratch two companies. One company is a digital mortgage company, and the second one is a real estate flipping company. I already have more than 8 years in real estate and PropTech field. We, through the bank's partnership, originated more than 3,500 loans and successfully invested in more than 100 property in fix and flip model. In 2022, I moved to United Arab Emirates and started to discover the field of mortgage and real estate here. We realized that there are big problem in UAE that non-salaried customers and non-residents struggle to obtain mortgages in UAE. So this type of clients, self-employed, all commission-based income professionals, business owners and non-residents, they couldn't be eligible for the traditional mortgage, but they still have needs to buy the property, especially on the secondary market, because developers has installments and has installment plans, but for the secondary market we have just two options, mortgage or full and cash buying. That's why we have the big mismatch between secondary market and primary market in UAE, and it was obvious that they need to find some way to solve this problem, especially for the secondary market. We have some benchmarks around the world, especially in US, UK and Malaysia already started the same type of companies who are providing the rent-to-own models for this target audience, and we decided that this model will be very successful in the UAE and GCC market, and we decided to start this journey. So I already told about the problem and why it's happening like this, because banks has the strict requirements for the scoring process of the clients. They couldn't just give the mortgages to all the clients. They need to make the proper scoring process. But for target audience, which was mentioned on the previous slide, we don't have enough information and we don't have sufficient information to build the good scoring model. That's why we need alternative decision, and the clients now are either rejected from the bank mortgage or banks ask clients to give the 50% down payment. Both ways are not getting the home ownership really affordable and accessible for this type of the clients. We have some global trends which is make this this solution even more desirable. MENA region, GCC region, now getting the hub, attracting economically active individuals. Foreign investors want to buy property in GCC and they need to have some financial instruments for that. Also, on the UAE example, we now have rent-to-own contracts in legal field, and it's very important, and it's now very good booster for such type of models. Also, what is very important, tech-driven solution, because now we have opportunity to fractional home ownership and fractional asset ownership. That means that the investors who want to invest in such type of business model can do it from all over the world with low risk and hassle-free. So, how the solution works? Tenant picks out the home. After this, we making the due diligence of the property, because here the due diligence of the property is even more important than due diligence of the client, because till the end we owning the title deed of the property, and by this we decreasing the risk of default. So tenant, after we made the due diligence of property, we originate rent-to-own contract for the customer with the option to buy. So we having the title deed of the property, and we making the long-term rent-to-own contract with an option to buy for the customer. So this is a lower risk for us, and gives the tenant opportunity to have the long-term installments for the secondary market. Until the client getting eligible for traditional mortgage, or till the point client paid out all the property price, we transferring the title deed for them. So the model works like this, is rather easy. What is very important here is that all the appreciation of capital gain go into the clients. That's why it's very comfortable for clients from one hand, and from other hand it provides a fixed, high yield, fixed income for investors. Is it clear what, what I'm talking about? So the main driver of this model is the capital. It's rather capital intense model, and that is why we need to understand how to finance this property buying. We had a lot of brainstorms and some hypotheses on which source of capital for such model should we provide, and at the final way we finalize our vision like this one. So from one side, here we are in the middle, we are the management company. Clients on the right side, and here the debt funding. So this is a structure of whole model. So we attracting the venture debt, the small amount of venture debt, and originating the portfolio of properties with the long-term rental contracts. After this one, we're making the securitization of this portfolio. So we have the property-backed security Sharia-compliant portfolios, which could be bought by high net wealth individuals, asset managers, and all institutional investors. So this is a fixed income instrument which is secured by property, and if we will compare this instrument with, for example, mortgage-backed securities, and it's even more safety for the investors, because investor has the real access to asset, not like the second hand from the assets, but here he has the real access to assets. So we put all the properties to SPV, originated rent-to-own contracts. Client pays for us, and we paying for the professional investor. Is it clear how does it work? Yeah. Here, what is an interesting thing, that securitization process now in UAE, for example, it's on the one hand is possible, but from the other hand is little bit long process. Now it could take up to 2 months, but we are waiting that it will be 1 month in the next year. So regulation is coming like this, and also here could be a full digital securitization process, and the here investors from all over the world could buy our asset-backed securities. So the average yield here, which we could provide to the investors in fixed income, is about 10%, from 9.5 to 10%. But investors don't have the capital gain. So all the benefits from property price growing goes to the final customers. That's why we can take higher yields from the customer and provide normal but very good yield for real estate for the investors. And we are like a management company getting just the management fee, service fee, and the originations fee. Here, usually about 1% per year, and we have origination fee like the mortgage origination. It's also from 1 to 2% origination fee, and then 1% each year. 1% every year.
So 13
And
are there? 13 or 12 are there total?
To the customer, you mean?
Yeah.
To the customer is 11 and 12, depends on type of the customer. But if we will calculate the options for the final customer, now they, for example, paying rent 5-6% per year. And also property price growing is about
5% if the property goes up, right?
5-6% is average. If you took all the market and will not be super optimistic, it will be about 5-6% he will pay for the long-term contract.
Where are you able to apply this to a commercial project?
You mean to commercial real estate? Is possible and for commercial, but now we are targeted on the residential, because the residential market in UAE, for example, is even bigger. And we understand how to attract a lot of customers from all over the world. We understand the cost of acquisition of this type of customers. We have the agreements with the agencies, so it's easier for us to get access to the clients and provide the good service for retail investors. But this type of legal structure and financial structure could work for any type of the properties. And in different parts of the world, there are some companies which is using this model for the commercial also, especially in Europe, in US, I know a lot. Yeah. How many years? We provide 10-year contract, but we fixed the terms just for the 3 years, and after 3 years we could change the rates for the final customers and for the investors also. We tried to do it as much as possible closer to the bank mortgage. So we understand because clients understand the bank's mortgage terms and conditions. That's why we try to be as much closer as possible to these conditions, but change model a little bit. The main changing of the model is because we earning the title deed, and if in case of default we just cancel the rental contract and selling the property. Clients also give us 20% down payment like in regular mortgage, and if in case of default having this 20% insurance, we can just sell the property faster, and our investors is on the safe side.
Yeah. If you fail to pay or you lost a job and you want to travel from the country?
If he failed to pay, we just
After 6 years he paid.
Yeah.
He lost the job.
Yeah. After this, if in this case, we calculate in the real market price of the property, selling it through the market, taking back our debt plus our fees, all our fees, and the rest of the capital gain we getting back to the clients. So first of all, our goal to save our investors and get all the fees, and then all the capital gain which was built for this 6-year period we provide to the customer. Even it could make at 2 years, at 3 years, or maybe the customer decided to change the property. For example, the family grows in, children are born, and they decided to change the property. At this point, the situation is almost the same. We selling one property, taking our debt back, and helping them to buy the new, bigger property. And for such service, we can make lifetime value of our customer 10, 15 years, and also. So our main goal is to pick up the first-time buyers at the beginning of their home journey and be with them till the end. At this point, when the clients getting eligible for traditional mortgage, we have some options. From the one side, we can make the portfolios of such clients and sell them to the banks. Because at this point, banks understand how the client was paying, what is the paying discipline of the client, and what is the real property price. And they have loan to value 50%. So it's very safety for the banks, and they can just take the portfolio of mortgages without any additional cost. They just paying for the mortgages. This is one point. That's why now we are thinking about maybe some collaboration with banks from the beginning, because at this point, banks and the insurance companies will get the proved portfolios of customers, but with zero additional cost. Finalizing all the thoughts with numbers. For now, we provide 10% fixed income with a loan to value 80%. So we have 20% down payment from the customers. From investor sides go 80%, and we provide a fixed income 10% for the investors. And I started to explain the example of customer journeys. Now they paying 5-6% for the rent, and also average property price rate 5-6%. So even if the customers paying 12% per year, he sum in zero. So because he fixed the price of the property today, and each year he get capital gain 6%. So even 12% and 13%, for example, in this model for the customers will be good for all the parties, because.
Best case scenario.
Best case scenario for the customers. In worst case scenario, we have down payment. So we need to understand that if we give somebody all the capital gain, then all the risks also should be on this party. If we provide all capital gain to the final customer, then we should take a risk on them. So we providing here the fixed income, all the capital gain on customer side, and all the property price downside risk also on customer side. But if we are talking about the customer who are buying the property to live here, this fluctuation, it doesn't really matter for them. It's really matter for them if you invest in and try to earn money from your investment. But if you're buying for like the second home or like for your home and you don't have another option, it's good. It's fluctuation, local fluctuation doesn't affect risk for the clients.
Total, what's the difference between taking mortgage and pay the money, the percentage of the price, and going with this rent-till loan? How much is the difference in the money-wise?
You mean difference between regular mortgage and our model?
It's nowadays it's 5.5.
5.5, 6.5, yes. Yes.
To fix it, it will be maybe 7.
Yeah.
But you talk about here 12 and 13.
13 is the best scenario. Now 11, 12 is a good option. 11, 12. So it's
The value, money value. Let's say
5%. So 5% more. I mean, it's our option. Our option.
overall. Let's say this house is my mortgage. I will take it at 2 million.
Yes.
After 10 years, when I use this technique, how much I should pay?
You mean how much down payment?
Total payment.
It depends on which end point of the journey you'll have, because we are not getting all the future expenditures of client upfront, like in Islamic mortgages. We are getting just each year. If, for example, on the second year, he decided to buy the property or go to the customer, he paid just for the previous years, not more, not all the future interests. I mean, am I answered your questions? Maybe. Okay. And what is also very important here in our model, that it's real asset-backed securities, and we provide asset-backed securities which is Sharia compliant. So at this stage, now we are tend to use the institutional investors, like the small institutional investors, private equity, high net wealth individuals. But at the point after we originate about 200 millions in portfolios, we can issue in Sukuk. And it's very important that our model is suitable with Sukuk, which is really important for the region, and could be boosted this model much more. So this is the perspective from the investor's edge. I already told a little bit about our instrument, that it is secure and scalable investment tool. So the main point is we provide the kind of the new asset class. This model will, it's important to say, this model will good work for the countries in which traditional mortgage historically are not developed very much, because of we don't have the conventional finance. Here is Islamic finance. In countries with Islamic finance system, it will work very important. Also in Indonesia, in Malaysia, already raising the such models, and I think they will grow across the world. So this is tapped and huge market, because for now, even in UAE, about 1 million potential customers, which is underserved by the bank. Including non-residents and self-employed, all commission-based salary individual. So here is asset-backed I already taught, and which is also very important, that our model is provide much more liquidity for investor. For example, if we are talking from investor's perspective, we have option to buy the building and rent it out, or we have option to buy the portfolio of these properties with rent-own contracts. In our case, you can exit 5% of portfolio, 10% of portfolio, and it's very easy, because secondary market, it's like the secondary market for the stocks, for the bonds, because it's security, it's not the physical. So it's very easy to sell. It's very easy to sell our asset-backed securities and give money back if you need some liquidity, than to sell in the building or to sell in just the whole property, the big properties.
Where to sell these portions of money?
Between our investors, between between investors. It's like the, maybe you see on the exhibition some companies which is providing the fractional home ownership, and you can invest in property even in $100. Yes, it's the same, but for professional investors with a bigger amount. So, and this positive social impact is 100%, because if we'll see on the vision 2030 here and the vision 2040 in Dubai, this is a main goal to attract economically active individuals to the region. And when the economically active individuals from all over the world tending to move, to relocate to GCC, we should provide them the good opportunities to buy the property, to buy the cars and all the stuff. Because now, if you're self-employed, for example, you really struggle to obtain, to buy the property or just to buy the car. You need to go and pay full in cash. So, for example, in my company in UAE, my employees can go to the for example, car dealer and take the car loan, but I couldn't. I should to go and pay full in cash, but I'm paying them salary. So this is a little bit mismatching with the real world. So the financial system and real world a little bit mismatching, but it's happening, as I told before, because of scoring models. Banks couldn't take this risk because they have strict restrictions. And you know, in January 2025 will be the new Basel requirements for the banks. And according to these Basel requirements, the situation will be even harder for banks according to their reserve. So this is a kind of benchmarks. For the other in the world, here is USA, but also in Indonesia, in Singapore, Vietnam, and Canada. This model already started to rise, and I think we just at the beginning of the process. If you need, if you want to photo, you can. Yeah, it's investors in the companies, yes.
So that you bring as a company, you bring the investor from one side. You bring as a company investor from one side, connect the investor with the guy who want to rent to perform.
Yes.
You are the middle guy.
Exactly.
Only, so that there is no any risk from your side. You only connect the people and give them the choice which flat or which
sure.
is good for both of them.
Yes, sure.
You take one percentage plus
origination fee plus origination fee. Yes, and also, which is very important, and what you told, that the investors and customers are not depending on our management risk. For example, they are just connecting through the SPVs, and we are not touching any SPVs. We are not touching money of investors. So we just upfront like the processing company. Yes, that's why this is safety, more safety for all the parties. If you are working bad, it doesn't affect no investors, no customers. They are on the safe side. It's very also what is very important to compare, for example, US companies and here GCC model for GCC. That here in US, very developed mortgage market. So anybody could take mortgage with 0% down payment, just come and take money. But there are a lot of type of customers, especially after crisis in 2008, which has a bad credit score, don't have down payment at all. So these companies are working with very low customer incomes, and their model are much more high risky than ours, because we providing financing for who has just a bad score or don't have money to pay down payment. They are just not matching with the bank requirements. They have good incomes, they have good credit score, they have money for down payment, but they don't match with the bank's requirements, and that's all.
There is no bank structure for such like in here. There is no
Yes.
products.
No, yes, no products. But we understand the bank side. They have requirements from the Basel. You couldn't do anything. But the main thought from this slide that we working even with the ideal audience. So they have good income, they have sufficient income, they have down payment, business, for example, business owners, yes? We had in 2022 a lot of business owners from Russia who wanted to relocate capital, for example, in GCC to buy properties, and some of them asked us to give them with the mortgages, for example, yes? But there is no way. So if the business earning you about 15% yield, it's easy for you to take 12% from us and not take money from the business, because take money from the business is a hassle process. You need to pay a lot of dividends and commissions and so on. If your business owners and your business is good, you also can use our model, and it's official for you, even if it's much more expensive than classical mortgage. Yes. So this is, guys, here are also as an example for securitization process. They just starting at the beginning of this year to make securitization process, and for this 9 months period, they already originated 2 billion in securities. And all American institutional investors, endowment funds of universities buying their securities because it's property backed and it's fixed income, so it's clear and transparent market. As I told, it's example just from Dubai apartment about long-term contracts. It's just the example for how big the market is. It's without non-residents. If we'll put non-residents here, it will be triple numbers. So that's all. This is my context here. We have 7 more minutes. I'm ready to answer the questions. I'm happy to answer the questions. Hope it will be global trends. Yeah, here is very VC investors, but we didn't took any VC investments yet, but they usually ask why now, answer for the question why now. And this is a very good answer for why now question, because before we in UAE, I'm not sure about Saudi, but I hope that it's close in terms of infrastructure. In UAE wasn't infrastructure just to make the digital securitization of portfolios, digital origination of title deed and portfolios, and also rent-on contracts was implemented just in 2022 before the COVID. So the COVID was the freezing period, and they are now just starting. Some of the developers already using this type of contracts. So that's why we think that the time is now, because all the global trends and local trends are combining in one point now.
Can we scan the QR code?
Sure. Hope it works. Works, not?
How applicable do you think this model is now in Saudi?
To be honest, today is my second day in Saudi, and I didn't dive deep to the Saudi infrastructure. But after saw how many PropTech companies here, I was really surprised yesterday. To be honest, I need to clarify some legal questions before I answer your question properly. For now, I couldn't sure, but I think that the model, as I told before, applicable for the all GCC and MENA countries, Egypt also, but they have difficulties with title deed. But for Saudi, I need to dive deep in legal structure. Yeah, just for take a look first time, and then I also saw some capabilities to relocate business here and so on. Yes, sure.
For people that do have access to a mortgage, is there any reason that take this
who has access to mortgage? Yes, the only one reason. If you want to buy second home, because now if you buy the first home, you need to take 20%. If you sell it, you need to take to make 20% down payment. If you want to buy the second home, in UAE, for example, you need to pay 40% down payment. But in our model, just 20% is enough because we holding the title deed. That's why, answering your question, if you're buying the second home, yes, you can use your option. And moreover, if you buy the second home, we can take your property for the management like a holiday homes, and from the 12%, 8% you will get back, and it will cost you just 4%.
Is there a ticket size for the project or the project?
$500K. Dollars, yes. It's a regular two-bedroom apartment, from 1 to 2-bedroom apartment.
Commercial?
Yes, for commercial, the structure will be the same, but the checks will be even higher. Sure.
Maybe it's not in the property side, but it's a more finance. There's something what we call buy, lease back.
Yes.
This is kind of financing options. So how do you see the perspectives? I know it's very common in US.
In the US, yes.
Especially franchising for commercial use.
Yeah, in US and in Europe also, but here is we don't have such an instrument, and this is a kind of this type of instrument. So you know the real estate and the fintech, we couldn't invent something 100% new on the finance, because finance already thousands of years exist. We can just make the combination of legal structure and financial structure of exact local market, which will work here. And for GCC market, the best combination, it's look like the rent-own model.
Okay,
In our
open opportunity for real estate.
sure.
If you transfer the title of the property, and it could be a complementary that, okay, since you have the title of the property, we can offer you buy and lease back for you. So it would be tempted, to get immediate money now. And after the tenure of the rental, then he has a call option to buy back the property and have it in title moved to his name again or her name.
You mean you like the financial from financial side?
I'm a property owner. I have the deed, I have the title,
Yes.
and I want money now. So I'll go to financing. Okay, you buy from me the property and lease it back to me for a certain period. It's a kind of repayment.
Yeah.
Once I finish the repayment, I have a call option. To
Yes,
receive back
yes.
the title.
It's
Maybe the price will be at the market.
it's like the revolving credit. They are very famous in US, but we are here targeted on the audience which just want to enter the GCC market, not who are already on the GCC market. We want to attract new customers to the market. That's why we targeting this type of audience who now are not eligible to buy the property.
Is this for financial institutions, not maybe for?
Yes, for financial, sure, it could.
But it's
Yes.
not a traditional product that's available in the banks now. So we need somebody really have the mindset on the property, and as well as having funding to give funding.
Yeah, banks here are just at the beginning of the journey. Can you imagine? They just started to developing. That's why we need to take them time to make the product line even more wider.
To this model? Here and here.
Yes, you can hedge your property and get loan from the bank. يعني اللي هو رهن عقاري.
They give you how much percent?
So you mean how many of property price they give you back? About 70%. So you earn in separate, they give you back 70%. In the US, for example. Yes.
So what happens in the case where the asset value decreases And the person wants to exit or needs to exit. You talked about scenarios for capital gains. What about it?
Yes, because we have 20% down payment from the customers and give all capital gain to them. In case it's decrease. Yes. Yeah, down payment it's our insurance.
What about the interest rate? It will be fixed to all Germany, or it will fluctuate related to the American central bank?
For the first 3 years, it's fixed. Yes, and then it's after that it's risk-free rate. So U.S. Treasuries
So that will be
less.
a question that maybe the asset price it will be lower than the price of the end of the timing. It will be lower than there's two scenarios that I am paying more than what asset value, or it will be less than asset value. So that there is two risks also in this type of.
But if the property price growing, only if the rates going down, right?
The interest go up, you don't know, and the interest is changing. You fix it for 3 years and you say 10 years, so that we have 7 years which fluctuated.
For the final customer.
Yes.
Yeah, but it's even we fixed it, and it's the spread between regular mortgage and the final price for the customer is the same. And it's very important point that now U.S. rates are started to decrease, and for the investors, for example, it's a good option to fix interest for the next 3 years and don't depend on the decrease in the customer the U.S. rate. Sorry?
You want to Dubai?
Yep.
So that this model is already in Dubai.
Yeah, we're now in the legislation process, and the first country will be UAE. Yes. Yeah. But if you
by himself or only by the company?
you mean if client declined to pay the property?
Yeah. Can they re-rent it or something?
To sublease, you mean?
Yeah.
Yes, sure. For example, if you're buying like a second home,
Yeah.
you can pay fixed installments and take it to the holiday homes company to manage the property and to provide yield for you. So it could be, for example, you pay 12% and the holiday homes gives you back 8-10%. So you paying just 2% net for the property, and you have the all capital gain of property price growing.
Okay.
That's
and
why.
The only way for the client to get out of the contract is by selling, right?
By selling, or to go to the mortgage, or to buy back all the debt. So 3 options: just sell, pay all the amount and give the title deed and take the title deed, and the third option, go to the bank, or we can help them transfer to the bank mortgage. You're welcome.